Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Hey guys, let's take a look in the gold market. Here is actually we need only intraday chart right now, because on the daily, on the fall time frame chart stands everything the same as it was yesterday. Today's specific object for our discussion is situation for today trading session. As you know, today we will get the gross domestic product release. Yesterday, as we said, is that we actually have considered the possible two type of action in the gold, and I said that I mostly is gravitating to the idea of the new top or something around the previous tops. Market will climb there, and indeed, take a look. Market indeed has reached the same level as here. It means that here we could consider, at least currently, potentially maybe the double top will be formed on the hourly chart. That is more suitable for a longer term retracement. It will be much better than the ABCD pattern here, because overall situation on the weekly and daily chart seems then solved that gold is overextended, and as it rather big scale, so some larger scale pattern should start the retracement. And potentially that could be the double top here. An upward action yesterday was on the, as you know, probably on the Fed statement. It's rather very dovish statement. It's really has made the pressure on the dollar, and gold also showing the spike up. But today, guys, we will get the gross domestic product release. Just a few minutes ago, we've got the numbers from the Germany. It appears the contraction of the economy in the second quarter for the 10-11%. It's slightly worse than expected. For the 1 or 1.5% worse. But in the United States this time, so overall expectation stands for contraction for the 35% on a quarterly basis. So this is just a dramatic drop, and it's haven't seen since the Great Depression in the 1930s. And well, it's something to watch for. And what numbers will be? Positive numbers, if we of course we could call these numbers as positive. For example, if economy will contract significantly less than for 35%, maybe it will be 15%, 20%. It would be better. In this case, it could trigger some reaction to the downside, especially if the difference between the expectation and real numbers will be very significant. For example, if the contraction will be just 10%, well, that really could be trigger significant retracement. That's what we could keep an eye on. But because currently market will keep an eye on the gross domestic product, no reaction will happen here, and we don't have the pattern. Theoretically, if you like to trade data releases, you could try possess yourself or taking the short position with the stops above this area, above 90.75 tops, and if indeed numbers will be much better, then gold will drop. But speaking on the more strategical point of view, for us is very important level is 1920. Because once market has dropped below it, completed our bread and butter, now it stands above it. And you know the 1920, guys, if you remember our monthly chart, I will show you. 1920 is the historical top on the gold. And for us, it is crucial to get retracement below it, to get the reversal swing on the intraday chart back below 1920. It will confirm some idea of the Russian risk or something of that sort. It will be good background for a deeper pullback on the gold. If this will not happen, the market will hold above this area, well, more probable that either market will just continue directly upward continuation, or it will be some coiling, sideways coiling action, where market will wait when it will abandon the overbought condition, and then will continue upward action. So everything stands around 1920, and here you can see as well this double top pattern that we have. Neckline stands approximately 1915, 1911, approximately the same area. So the double bottom, double top here, drop below this area, because today, guys, already the 30th of June, and today's will be last trading session for the month. So we will get the new candle on the monthly chart, on the weekly chart. So that will be really important. So currently, it's a very important moment from the technical point of view, technical analysis. So that's what we'll keep an eye on. This choice is up to you. If you would like to gamble a bit and you are ready for that, well, you could try to take the short position in anticipation. These numbers could be better. If you're not ready for that, just wait for a release and see what will happen. Confirmation of this double repo, breaking on 1920 right back down, better than expected gross domestic product numbers will be good background for a starting retracement on the gold. Because retracement is ripens already on the last week already. Well, some difference, worse numbers or numbers around the same level, well, probably it will be not good background for taking the short position yet on intraday charts, and retracement probably will be postponed on some later period. That's what we will keep an eye on today on the gold market.